In this video, I'm going to share with you the mechanical origin point strategy that allowed me to stop staring at charts all day long and finally achieve consistent profitability in my trading. If you're tired of endless guesswork trading the concepts like the fair value gap or the order blocks, feeling chained to your desk and getting wrecked by the FOMO and analysis paralysis, then this video is for you. I'm going to show you how a time-based and rule-based approach can give you your freedom back while consistently scaling your trading account. My name is Islam and I'm the founder of Overpowered Investing. After 7 years of trading, I found that the most profitable setups happen in a predictable window of time. This single discovery helped me to build what I call the OP investing methods now and scale my account to 6 figures, become a funded trader, and finally left my 9-to-5 job. Today, I'm gonna break down 3 core market movements that my entire strategy is built on. Then, I'm gonna walk you through 4 mechanical patterns that I use to trade these market conditions. There is no subjectivity or confusion, just a clear rules that you can start using today. But first, we have to address the reason why 90% of traders fail, even using those so-called smart money strategies. And I want to be clear here, if you have failed with trading in the past, this is not your fault. It has nothing to do with the discipline and everything to do with the tools that you were trading. The real reason why you're failing is because all of your strategies are built on the foundation of subjectivity, and they require you to be in front of the charts 24/7. Strategies like the market structure analysis, order blocks, fair value gaps, etc., they are all filled with subjectivity and a lot of guesswork. Think about this. Every time you take a loss, you blame yourself. You ask yourself, was that the right order block? Did I draw the structure correctly? This uncertainty leads to constant tweaks of your strategy and zero level of confidence. Worse yet, these strategies have no time element. A setup that you were waiting for could appear at 3 a.m. in the night when you are sleeping or when you are having a dinner with your family. Simply, you're not in front of the charts. And what do you think happens when you miss that one trade that you've been waiting for a whole week? Exactly, the FOMO kicks in. You force the next trade, break your rules, and give all of your profits back to the market. You're trapped in a cycle of anxiety and inconsistency. So here's the solution to all of this. You have to trade the strategy that is based on the price plus time series. Instead of hunting for setups whole day long, you need a system that will tell you when exactly all of those high probability and high profitability setups will occur. This allows you to show up, execute, and leave the markets and live your life on. You need a strategy that you can actually copy-paste because the rules are the same for everyone. But how is that even possible? I've got you, bro. So here's the core logic that makes all of this stuff that I've told you possible. After years of backtesting and forward testing the markets, I found that during the most volatile trading sessions like the London and the New York sessions, the market almost always does one of the 3 distinct moves. First, it will either break out and continue in the direction of the breakout. Second, it will break out and retest the key level and then reverse. Third, it will break out and go and take the liquidity beyond the key levels and then reverse. Once you truly understand this, you stop hunting for the markets. You stop predicting the markets. You just wait for one of these 3 setups to come to you. And most importantly, most interestingly, at specific time of the day. Make sure to stick till the end of this video because I'm gonna tell you everything, plus we will cover some real life examples on the real charts where you can literally learn all of this for free. So folks, let me ask you a question. If we know that the markets move in those 3 patterns, like it's gonna break out, retest, it's gonna go in reversal, and it's gonna take the liquidity, how do we actually build a strategy that is mechanical and repeatable for everyone if we have this information? Just let's think about this. First of all, in this situation, we need something that we call an anchor, the origin point. Okay, basically the origin point is the first 4 hours of the Tokyo session. We just need to mark up the high and the low of the price action that happens during those 4 hours. Why? Because the Asian session is the quietest time of the day, and the London and New York sessions are the most volatile time of the day. Basically, from now on, we're not just randomly scattering around the markets thinking about like, we have to read this structure looks good, this structure looks bad. No, we have an anchor, origin point that we are all starting off. That's it. So folks, by the way, we are going to trade all of this stuff on the 15-minute time frame, and basically this box becomes our map for the entire day, this origin point. Basically, all of the patterns that we're going to trade are going to be based on how price reacts to these origin points and some of the key levels that are inside of the previous day candle and previous day high and previous day low. Based on all of these data, I developed something called the OP investing methods. These methods cover literally all the possible market conditions. So OP method number 1, this is focused on catching the new trends. We wait for the strong breakout of our origin point and then wait for the retest of our origin point and continuation in the direction of the breakout. OP method number 2, the key level reversal. This method is focused on catching the reversals from the key supply and demand zones. Just think about this. After trending days, let's say the previous day candle was a super trendy, super bullish. The next day, probably the price is going to pull back into the previous day candle and then continue going with the overall trend in the direction of the major, like the daily trend. So basically, we have a specific way to identify and trade the reversals from the supply and demand zones from the previous day candle. OP method number 3. It's a border reversal strategy. We trade this during the choppy and rangy markets. With this strategy, we are focusing on trading the reversal, the liquidity grab around the borders of our origin point. Basically, there are tons and tons of liquidity are resting above and below our Asian range borders. We just need to wait for the reversal on the low time frame, the sweep, and then bam. OP method number 4. Basically, this is OP method number 3, but on a higher scale. We are hunting for liquidity that is resting beyond the previous day high and previous day low. By mastering all of these 4 patterns, basically you have a tool for trading all of the possible market conditions. And you know exactly what you are looking for every single day. Knowing all of these patterns is great, but how do you actually build a profitable system, a profitable trading plan that you can follow that will give your time back? So here's how we build a system that's going to give you 5 to 10% weekly profits without being glued to the chart, spending just 5 to 15 minutes a day. And the solution is simple. 3-step daily routine. This is simply how you transition from a full-time trader to the part-time sniper who just shots a very sniper entries and lives his life. So here's a routine. It literally takes less than 15 minutes a day. At the beginning of the London session, you're going to spend just a couple of minutes of your time just to draw the high and the low of the Asian range. Then you have to identify the key levels at the previous day candle, like the supply and demand zones and the previous day high and previous day low. That's it. Your map for the day is set. Then 10 to 15 minutes after opening of the London or the New York session, you come to the charts and check them once every 15 to 30 minutes. Your job is to look for one of these 4 patterns: breakout and retest, breakout and reversal supply and demand levels, and liquidity grab systems. And steps 3 is simply execute and leave. So basically the OP investing methods are set and forget strategy. If you see that one of these 4 patterns are forming, you're just going to set your pending orders, set your stop loss, take profit, and just close the charts for the rest of the day. If you see that the price is chopping around, or it's super extended, like it's not giving us any of these 4 patterns, you just close your computer, turn off your phone, and just live your life, leave that day and come back the next day. So now you have a system. Let's cover some real life examples with this strategy. This is a Euro USD on the 15-minute time frame. This is 3rd January, and we do have the breakout to the upside. As you can see over here, the price is coming back and retesting the 60% retracement level of the FIB levels. The stop loss is going below the 80%, and the price is giving us a beautiful 6-hour trade. This is called the OP investing method number 1, and we are going to do a full month's backtest with it, and I'm going to show you a bunch of backtests where it worked, where it didn't, why it worked and why it didn't work, and how to find an extra confluences, how to make this strategy actually work. Probably the most of you heard about the strategy which is called the orb strategy, opening range breakout. That is a really mechanical strategy, but the only difference between our strategy and that strategy, our strategy is ARB strategy. That is the Asian range breakout strategy. With the orb strategy, all you need is to just mark up the only one candle and then trade the breakout from that single candle. But with ARB strategy, with OP method number 1, we are trading the breakout from the whole session, or let's say the first 4 hours of that session. Okay guys, maybe you're wondering what the hell is those vertical stripes, the gray one, the green one, and the pink one. This is a sessions indicator which helps us to identify the first 4 hours of the Tokyo session and the first 2 hours, the beginning of the 2 hours of the London and the New York sessions. As you can see over here, the Tokyo from 20 to midnight. By the way, guys, you just need to go to the indicator sessions and just type the sessions. This is what we are going for. Sessions on chart, Aura AIF 9.6K. So basically this is the settings of that indicator. Just copy this one by one, and this is a style like that I prefer following. After that, you're going to get these vertical stripes, the gray one, the green one, the pink one. All you have to do is just to draw the high and the low of the price action during the first 4 hours of the Tokyo session. So here's the first candle, here's the last candle, as you can see over here, and this candle over here created the highest point, the maximum point of the price action, and this candle over here created the minimum, the lowest point of the price action during those 4 hours. Basically, this time range is going to go as our price range. And basically what we need to trade with this strategy is to wait for the price to break out from this range and retest this range during the first 2 hours of the London or the New York sessions. That time we're going to get the highest probability, the best trades ever. And there are a couple of more kind of like the confirmations that we trade, that we use to get. I will be covering up all of that just as we proceed further, as we do the backtest. Okay, let's get started. Okay, as you can see over here, we did this setup, like we have covered it, like how it was. Let's move to the next day. Okay, here we have the 6th Jan. The price is just basically breaking to the upside, but it's never coming back to retest our Asian range. So we do have the breakout, but we don't have the retest, so we don't have a trade that day. The next day, the price is breaking up and it is retesting and reversing from this previous day high candle. And guys, basically this is a different story. And one of the first confluences that I teach inside our mentorship program is this, guys. When we do have the breakout from our Asian range, ideally we want to see a retest of our Asian range first before the price goes and retests any extra kind of like the outside level. In that case, guys, there will be a higher probability of OP method number 1. But in this case, the price is breaking out and it's retesting the outside level directly. That is why we do have another trade, which is OP method number 2, guys. More about this strategy, I will leave the link below how you can learn about this one. So let's get next. As you can see over here, we are having some sweep of the Asian high before the London session. As you can see, this green zone is that London session. That's why during the London session we are breaking to the downside, but we are never coming back to retest our Asian range. That is why we are just living this day. And the next day, guys, over here again, like the price is breaking to the downside and it's going like exactly into the previous day low, and it's retesting that, like, it's not giving us the OP method number 1. And by the way, guys, I totally forgot how you are going to enter this trade. Basically, we do have the Asian high, we do have the Asian low, we do have some price action over here. The price is breaking to the upside, let's say, and when it's coming back, guys, all we need is to get our FIB levels and draw it from the bottom of the breakout of the bottom of the Asian range to the top of the breakout. So basically, and you are going to place your entry at the 60% or 70% or sometimes 80%. Basically, for those who are beginning right now, I would suggest you to break down your trades into 3 parts: 60, 70, and 80. Your stop loss can go below 100%. When you are entering at the 60%, your stop loss can go below 80%. That is going to be like the best. But if you're entering at the 70% or 80%, your stop loss is ideally should be below the 100% FIB levels. And guys, and most of the times the price is going to give you 5R with these trades, sometimes more, but not always less. Like 80% of the times it's going to give you 5R. That is why this is called the 5% strategy per day, because you're going to get like 5%. Like if you risk 1% on this trade, you're going to win 5% with it. Okay, let's move forward. Over here, as you can see, we do have the breakout to the downside. We are placing our trade, like we're drawing our FIB levels from the high to the low. We're placing our trade at the 70%, and the price is just sweeping this high and then just going to the downside, like in our direction, but without us, unfortunately. So we do have some losses. This is not some holy grail strategy, guys. The next day, guys, basically we do have the breakout, we do have some range, the price is not coming back to retest. So usually we do take our entry during the first 2 hours of the London or the New York session. The rest of the time, as you can see over here, basically we don't trade. We just close our trades, close our charts, and leave our day. That's why basically trading this strategy, all you need is just 15 minutes a day. Like whatever job you do you work in office, do you work outside, all you need is to check your charts. You can do that by phone as well, guys. Like ideally that's a laptop or the computer, but you can do that by phone as well. You don't need much time. You do the analysis once, you set your trades and forget about the charts. That's all. It's set and forget strategy. Okay, folks, this example, we do have the breakout to the upside. The price is coming down and retesting the 80% retracement level and then going to the upside, giving like a beautiful 5R trade. The next day, guys, the price is breaking to the downside before the London session, and then we are having a really nice breakout to the upside. Then we are entering at the 60% retracement level. The price is giving us entry once during the London session and twice during the New York session. The price is retesting and then boom, and it's giving us a beautiful 7R trade over here. Beautiful. Okay, let's move to the next day. We do have the sweep trade. As you can see, we have the sweep here. It's a OP method number 3, guys. This is a third strategy that we trade. And of course, if you want to learn more about that, I will leave the link at the end of this video for the next video where you can learn more about all of the 4 strategies that we trade daily to scale our trading to 6 or even 7 figures. Okay, this is OP method number 3, and next what we are having OP method number 2 over here. And by the way, guys, we are having the breakout to the downside, but we are not trading this OP method number 1. Why? Guys, I only teach this to people inside the mentorship, but I'm feeling so generous today. So that's why, look, the context while you're trading is a king. And we have to look at the previous day candle over here. How does it look like? It's going to the downside and it's going to the upside. It's a V-shaped formation, guys. It's a V-shaped formation. If you open this on the daily time frame, it is going to look like this, and it's a pin bar. And what happens during this pin bar? Like most of the times, there's a very high chance, like 60% chance, that the next day is going to be bullish. The same happens here. Kind of like ideally, when we do have the V-shaped formation to the upside or inverse V-shaped formation to the downside, we look for the trades in that direction, in the direction of the reversal. So in this case, we either look for OP method number 2 from the
previous day candle in the direction of the reversal, or we look for OP method number 1 to the upside. But in this case, guys, the price is just giving us OP method number 2 from the previous day low. So the context is the king. And basically the next day we are having the breakout, but kind of like the price is not giving us the entry on the FIB levels, you see. But like in the past, those people who know more about the OP investing methods, we had something like the break block, the candle that created the Asian high and the Asian low, that is considered to be as the break block, and we used to trade this, and our students trade this. Like, we do have more about this inside our mentorship program. And as you can see over here, 50 hour trade, guys, break block entry. But yeah, this requires a little more time, a little more screen time, like, to trade it, you know. Personally, I love my freedom. I didn't start trading just to be a slave for the charts. I got rid of my 9 to 5, my full-time job, and I'm happy that I'm free and I can spend my time with my family, with my wife, with my children, and that's why I prefer trading with the FIB levels. But you can trade with this one as well. The next day, guys, basically this is again like the Asian range is a bit extended. We don't have a nice breakout to the downside. We do have the breakout to the upside, but it's already too late to trade it. Like, this is not during the first, like, you know, 2 hours. Okay. Here again, like the breakout size, or here the breakout size is a bit too much, is a bit too high, and that is one of the confirmations. And this is a little secret that you can learn inside our mentorship program. All the links will be below. The next, we do have the OP method number 3 day, giving us almost 10 hour. The next day, the price is breaking to the upside, never coming back to retest. The another day, we're having the OP method number 3. The price is ranging the next day, nothing interesting. Like, okay, like even if you wanted to trade the OP method number 1 over here, like that would have been a pretty good entry at the New York session. As you can see over here, the stop loss would have gone here, but your take profit only would have get hit only the next day, you see. So like basically I don't trade such stuff. Even if I've entered here, I would have closed somewhere here. Like, I don't like uncertainty. This over here, we do have this breakout to the downside. My eyes are super trained to identify the Asian range. Probably it is not that obvious for you, but over here we do have Asian low, and over here we do have the Asian high. Okay, we are having this breakout, but the price is never coming back to retest the 60%, and instead it is retesting the break block over here, as you can see, and the damn break block is giving us crazy trade. Crazy. How a 10-hour trade, 10-hour trade, guys. Even risking 1% of your capital, this one trade can pass you any challenge. And the next day, you see, again, what does this look like? This is a V-shaped formation, right? And the next day, we're getting the OP method number 2 from the previous day low, and we are filtering out this trade, this OP method number 1 here. We're filtering out. How? Because we know about this confirmation, guys, and we have more confirmations inside our mentorship program, how you can get a higher chances of trading the OP method number 1 or number 2 or number 3 or number 4, and combining all of these is going to be crazy. Okay, the next day, 31st January, we're wrapping up, and over here, look, we are breaking to the upside, but the previous day candle looks like a V-shape reversed. We're breaking to the downside, and we're entering at the 60% and getting stopped out. So this is what's happening on the 31st, and on the 3rd February, the next day, again, like you can see over here, this is Asian range. We are having this breakout to the upside. The price is retesting 60% and giving us a beautiful 5-hour trade. It's always 5-hour. The next day, we're getting the OP method number 2, and so on, guys.
So now you have the exact framework, a time-based approach, an origin point to anchor all of your analysis, and the 4 mechanical systems, patterns that you have to look for every single day. This is a foundation that removes the guesswork and gives your time back. But I've only been able to scratch only the surface level of all of these patterns today. Knowing what are these patterns are is just one thing. But knowing all of these little things, where to place your stop loss optimally, where to place your take profit, how to know which of these patterns are likely to work today, that is what separates the amateurs and the professional traders. This framework is incredibly powerful. But a complete step-by-step system is exactly what creates six-figure traders. And that complete system with dozens of examples, dozens of lessons is what I teach inside of our OP Investing Mentorship program. If you're ready to master a mechanical edge over the markets with my personal mentorship and scale your trading to 6 or even 7 figures in the next 6 to 12 weeks, send me a direct message with the word ready on my Instagram or Telegram. Me or my team will contact with you and give you all of the information how to get started. But if you're not ready yet and want to get more information about the OP investing methods, we've covered OP method number 1 more in depth in this video.